All right, good morning, everybody. Welcome to the Catch the Turn training webinar. My name is Joel Dollar. I'm the Chief Trader for Catch the Turn. Hope you guys had a great evening. Thank you for joining me this morning, and hope you are doing well this trading week here. I'm going to keep this meeting short today for about half an hour. I have a meeting to attend here at around 8:05 and take care of some trading items. So we're just going to go ahead and review what we're seeing now. This was the Aussie USD that I was in yesterday. And as you can tell, there were a few things that I decided that were possibly happen. We would form the W that we're used to seeing on a daily. We'd move down, move up, move down, move up. We could either gone straight down or form the lazy W that we're used to seeing. We'd come up, up, down, and then back up. So I expected price to get to me. Now I think it was around 80 pips today. I'm back down to 2.8. I'll probably move back up and probably be down around maybe negative 100, 150. We'd touch, and then we're going to start head down again. So the options I have here, it's pretty simple. I can let it move back up, which I'm going to actually. Let it move back up and then double up, re-enter back up here at this next deviation. Right back down, I'm going to cross my entry, let it move down 10, 20 pips, slow down, and now I'm riding the leg again. So we can see Cobra did go back to yellow, meaning that this was a candle that was crossing the early warning. This was our closing locking candle right here. Actually, take that back. This was our closing crossing candle here, and this candle had to today's candle had to actually close past Cobra. It didn't do that, so of course we went back to being yellow. So it was not a lock. It was an early cross here. So as we can see, here's early warning candle. This day candle had to close. It never did happen. So we caught up on Cobra, which is no problem here. We're setting negative 3.9, looking for it to move possibly 160. I'll go 200 just in case we get there to deviation there. That is why when you trade position trading here, you do not want to use all of your margin. You know, do not keep it very tight because you're going to have this happen. But learning to recognize these patterns here, we can pretty much see which way price is going to move, forming a lazy W, and then shoot back down here. Why? Because we are lined up with the weekly to head down. So no worries there. I will continue posting updates on this trade. Took some notes last night on the Euro USD. This was priced at 12:09 a.m. my time, which is Central Time. And here's a few items here because I know this was probably tempting for some people or for those who were going to stay up and swing the London Euro session here. So there's a couple things that could happen. We could have actually moved down and tested Cobra and then moved back up and down, or we could have shot up and then back down here. So you just kind of had to watch and assess what it was doing here. Let's see, let's see, pull up swing. Swing. And there we go here. This is where I pulled in last night. I wanted to show you guys, do not pull. We didn't have deviation. This is what happened. This is only pennies here. So you got in, you waited late, you got in, you pulled in. So this is why we won't do that there. Why not? We're not deviated far enough. Prices turn on the 15-minute here. There's no point to do that. So looking at these notes here, would you gotten in here? Would you let it come back to deviation? We want to watch it come back to deviation here. So what I want to do is put myself in the seat of somebody who would do that. This is what will happen here. You could have lost roughly 16.9 if you would have got out. Please don't tell me you would have stayed in, because you can see in the 15-minute we're actually turning up. So this right here is what would have happened. So please do not do that. Let it go up and get far up from deviation here. And you can also see too, look at the ocean here. This is a tell sign. See how we're starting to slowly curve? Same where we're at here. Same right here, slowly starting to curve up. Why is that? Because let's go to the position chart here. Even though we're down on the Euro USD here, we're still due for another breath up on the daily. So right now we had a nice week down, but we're still due for another push back up because we have not yet cycled and turned on the daily. We've got our first piercing on 4 hour. even though we're down, we might look for the next week to close and be another up week, then be a down week, then be an up week, and we're slowly going to do what's called stair-stepping our way down. It's actually saved. Let's go to paint here. And what that means is you can see this happen a lot in price. There we go. It'll stair-step its way down. Might come up, stair-step its way back down. Come up, stair-step its way back down. So the daily needs to get back in line with the weekly before we have any clean push. Now, you could have gotten in anytime. You could have gotten in anytime because we are deviating. We are coming back into play. You can actually see that right here. We're into play, deviated. So we are going to come back down, but it's how we come back down. We're going to go, you can see here, down, stagger it up, down, stagger it up, down, stagger it down. So I'm looking for price to move back up a little bit more before we get a solid lock and a solid lead, and then of course I'll re-enter when the daily has cycled back down. But for those of you who proved too tempting to pull a trade, just be cautious. You can see right now, yes, we did hit deviation point, but looking on our actual raw chart, we didn't have a full push through the kill zone. This is right here. I love to see this. This is extremely deviated here. This is one of the best things you can probably see. Same point for here. The more deviation you got, the stronger that push is going to be. It's kind of like pulling on a rubber band here. The more you pull up this way a little bit, it'll just kind of have a little snap back. You pull way far and let it go, it'll really snap back into place here. So last night I figured, I said, well, I bet somebody will probably pull the trade. So pull it this morning here and see what they would do. And this is what would happen. It would have been way up here. Hopefully you would have seen the candle and gotten out, but way up here. So this is what you're looking to see. So is it the system? No. It's basically patience on waiting to see what's going on with the ocean here. Waiting to see it turn here, what was going on right now. We had plenty of buying volume here. There's nothing showing on the strength of the bears with the bulls here moving up here. For stealth wasn't tracking any bull movement here, and we already got an average arrow around, right? We already piercing to show that a turn was possibly coming here. Plus, did you check your news? So it's easy for me to see what entries are in this trade here. It's very easy. What I've bought here, no, I don't want to go against the ocean. Why? Because I know the daily is due to come up. So what's going to happen is it's going to show first on this 1 hour chart here. You're going to see it on these smaller time frames here. We're going to see it actually start moving at, what's wrong with it? We're going to see what's going on. So we can tell daily went up, took a small breath down, daily went up. So if you're trading old school and trading technical analysis here, it's been real easy to load this up here so I can get my tools. You could put like a trend line saying, okay, this is the bounce of the trend line right here. We're going to go ahead and buy back in. But we know that the daily is due to come back down. So we're going to see some more bounces. We might form the W and then start heading back down. And that ocean itself is going to slowly turn its way back down. And over here would be your ideal leg in. But the smaller time frames, they're going to start showing it first. The 1 hour will start turning and moving up as the next week is up, and then it will slowly turn back down again. So just be cautious here. I don't know if you guys are trading any other trades or pulling other trades today. As I said, the Aussie USD is one I will be posting and we'll be watching. So that's the swing chart. Let's go to the position layout. It's going to vary. That's the big deal there. People will tend to be up. Well, right now, they would get nervous if they're live money or when they're real live money here. I've got on this one here. I've got lot 3 standard on it, roughly $31 a pip, roughly. They would get nervous and they'll close these out because they think well, it's going to go against me. Well, not really. I mean, you got in here looking for it to push down because there are times when you're going to get that full W pushed straight down. We might get a high bar hiccup today and then continue to pull down the next week. So getting in here If price comes in here, my first level is to close out, let it ride back up. If it doesn't get here, which yesterday I mentioned, we could do two things. We could actually pull down, go up, or form a lazy W, which is in the guide. If you look in the guide, we have a lazy W formed. So let's see. Ocean is turning. Ocean is turning. Let's go red. And we formed. We'll come up, bounce, come down, and we can form these lazy W's here, which we can see right there. So I will be looking to either, now there's things in the past where you will move, you'll continue to, let's go black. You continue to move actually down and form a nice W, but regardless, you're still going to go down. These are your entry points again. You could have got in like I did, close profit here. If not, you stay in. When it moves back up, you double up, enter again, and now you ride your profit down. You have two positions open up, so you're just doubling up your money here. So we've fluxed. We've been from 9 today to negative, I think, 6. I think the first day I opened up, it went down to 8, positive 80. So this is a trade that I'll be monitoring here. And this is what trading position is about. It's not closing it when you hit your first negative pips. It's about keeping it up and letting your trade mature here. I was shocked that I did go up 80 within the first day. That's very rare. I was expecting a stop here on value, then a bounce back up when we went down a little bit. So we'll see this, and we'll monitor this for the rest of the week here and see how it pans out next week. So let's see. USD CHF here, a prime example. This is what I'm going to do on this one here. I'm going to wait for the Euro daily to cycle back down. Same as USD CHF. If you're on the weekly right now, you're set up for a long. You're set up, but just know you're going to have to actually cover a little bit because price might move back outside deviation for a whole other week. And this would be enough to either force a margin call on somebody who didn't use the correct margin, or force somebody who is a little bit nervous to close it out. You can look on the daily right now and see we did have a week up, but we're slowly coming back down because why? We're at that deviation point, and this is a strong. I mean, there's difference in the oceans here. If you look at the curvature of the ocean here, these lines are literally almost straight down instead of having the little having a little pull, which would look like this. Let's see. All right. So what we're looking for is these are literally, instead of having more of a straight line here that we would see, or having more of a curved line, it would actually start coming like this. This is when I start to really know that okay, that ocean is starting to turn here. We're bouncing, hitting, bouncing. Now I'm looking for next week to come back down, hit, come back down, hit, and it might form a W. It might form a V. And then looking forward to slowly work its way back up and get in line with my weekly chart. Once it's in line, I'm going to go ahead and buy long, go back to the Euro USD, go long, or go short, go short, and then we will be basically doubling our money here because these pairs correlate very well. One of the best pairs that do actually, I think it's like 92% the correlation here, from 85 to 92% correlation. So it's a pretty good pair to do that too here. So if you are demoing, please keep trading. Please keep placing trades. We had a lot of good posts on the social network last night. A lot of people are posting trades on there, which is very good to do. Post trades, post the wins, post the losers here. At times I will post trades, or I will take trades. I'll try to put myself in the shoes of a new trader and say, well, I'm going to go ahead and pull here and see what happens. I like the fact there are times it works out, there are times it won't. I like the fact to show you guys that. Please just realize that that it's not always going to go that way. You want this max deviation. If you can get it, you want it. You at least want a candle wick outside, because if the wick is in the kill zone, price is actually outside the kill zone. When it's inside the ocean, it's fair game. That is why there are times, I think 3 weeks ago, I took a trade just to show. I wanted to say somebody was wanting to get into a trade when they're emailing me that they wanted to get in, and I said no, because we're at value. And they said, well, there's times it will go, I guess, their way. I said, well, tell you what, I'll take the trade.